NBC Universal parent Comcast just out with quarterly numbers. Quarterly profit came in at 52 cents a share. That was 2 cents above what the street had been expecting. Joining us right now to talk more about it is Comcast chairman and CEO Brian Roberts. Brian, thank you for being here today. It's good to see you.
Good to see you.
I know with Comcast, it's often not the earnings per share that's the most important number. We have adjusted EBITDA up 5%, free cash flow up 66% to $2.3 billion. But I think this quarter, the number that everyone had been waiting for was that number when it came to video customers. The key being video customer losses of 125,000 compared to gains of 32,000 for the same quarter a year ago. The company points out that that was primarily because of a more competitive television environment and the impact of hurricanes. But this is the number people have been waiting for based on what Comcast said last month and what AT&T said earlier this month. Can you tell us how much of that was because of the hurricanes and how much of it was because of other factors, the competitive environment?
Absolutely. And nice to be with you again. So we lost about 100,000 customers if you exclude the hurricane, and about 125,000 or so 25,000 for the hurricane. My view is that, yes, it's a competitive market. We saw it coming, but this is a really strong quarter. And if I might, let me just take you through a couple parts. The cash flow of the company, which is, I think, the main metric that we judge ourselves on, adjusted EBITDA, was up 5% across the company. For the first 9 months, that's 8.5%. And that includes the storm, and that includes not having the Olympics in the third quarter where we did the year before. So if you break the two companies apart, the cable company had a really solid quarter, a very strong quarter. The video you've talked about, we can talk about that in a moment. Broadband, we added about 240,000 customers without the storms, a little less with the storms. And we believe we've kind of pivoted to where broadband is sort of the first product. We now have 25 million broadband customers, 22 million video. Broadband's more profitable. It's now a majority of the cash flow comes out of the broadband business. And there's two parts of it, residential and business. And those two businesses together are now $20 billion of revenue, growing at double digits, and have higher margins, so it's accretive to the whole company. And in the video business, we're trying to be the premium provider. We really want to have, with our X1 platform and some of our other innovation, which is really, I think, distinguishes Comcast from maybe everybody else, we're going after the best customers who want to take it in a bundle. And for the first time today, we're talking about our mobile offering, Xfinity Mobile, and we only launched it in May, and we've now reached over 250,000 customers. So we added a couple 100,000 broadband, a couple 100,000 mobile customers, and we see for this year a strong fourth quarter in broadband if things continue, and we'll be for the 12th year in a row over 1 million customers in broadband connectivity. Over at NBC Universal, a fantastic first 9 months of the year, thanks to the great work of a lot of people. And in the third quarter, again, if you back out the Olympics, 20% cash flow growth would have been the third quarter in a row. These are the best 3 quarters we've had at NBC Universal since we bought the company. And that's because all parts of the company are doing well, whether it's theme parks up 10%, and we opened a water park, and in Japan, our acquisition in Osaka has really just had new attraction with the Minions, which is the symphony, where our IP is helping in the theme parks. They had a great quarter. If you look at television, if you put cable and broadcast together, for the whole year, it's a double-digit growth in cash flow, and that's coming from, in the case of NBC, the biggest lead any broadcaster's had in 6 years, one over the other, first place over second place. This is our 4th year in a row of NBC being in first place. And in the film business, because of Despicable Me 3 and some other great films this year, which, by the way, is now the largest animated, I believe, the largest animated franchise of any movie in history, animated movie in history, thanks to Chris Meledandri, Universal may have the best cash flow year in its 100-plus year history. So the whole company, lots of growth, lots of good stories. Yes, video is changing. When you think about that change, what we've tried to do is use our voice remote to integrate products like Netflix and YouTube and be a premium experience in a bundle that gives you the best internet with the best video. And in some cases, there's customers where they're going to new offerings that are cheaper, and that's a market that we have a new product called Instant TV, but we're going to only do it in a profitable way, and so far, that's why you see the balance in our results. And this is the way that we've tried to operate the company. We saw this change coming. It drives our internet business, and it drives over-the-top revenues for NBC and Universal when people go to these new services, and we'll see how sustainable they are. A lot of times the first month's free. So all in all, I think a really strong quarter with 5% cash flow growth.
Hey, Brian, I can't remember where I saw it, but it was sort of a tongue-in-cheek thing. It was someone writing, you know, I got rid of my bundle, and then the World Series happened. The game last night happened, and I realized that there's going to be certain things, and I've said this, if I have a 70-inch screen and Xfinity, I don't know, I'm not sure, I'm old, but I don't know if I ever go over there. I don't know if I ever want to. It seems like I have everything I need, but that notwithstanding, the stock, I was surprised that it reacted that negatively to that news from 3 weeks, whenever it was, or a month ago, although it had run up to 40, almost 42. So it's been on a roll. So it did pull back. But correct me if I'm wrong here. If people do switch over the top, don't they need Wi-Fi or something? Or do we go beyond that? Don't they use broadband anyway to look? I don't understand why video is still this tipping point. It's almost like people are so ready to say that, you know, it's changing and it's going to go over the top that they're ready for the slightest thing that confirms that there's going to be these skinny bundles or something.
Well, I think you said a lot there, and I think and the only thing I heard is that you're old.
There was a question. Yeah, thanks. There was how about wise? But there was a question in there.
No, so the question I understand. So I think that your thesis is right. There's a lot of us, maybe we're all old, who really want to have the best experience. Not everybody drives the same car. Not everybody wants to have the full complement, but most do. 200,000 on-demand choices, talk to your voice remote, be able to enjoy on any platform, multiple DVRs, in the cloud. It's a great experience. And when something like the World Series happens, it proves its value yet again when you find something you're passionate about, and we're getting more and more choices every day. But we saw a change coming, and a while ago, not only did we diversify with NBC Universal, so that 20% cash flow growth this first 9 months is about a third of the company, but you're right, the broadband is the best way to experience some other form of television. And of course, with rising programming costs, the television profitability has been going down while the internet profitability has been going up. So what we've done at Comcast, and it's why not everybody's the same. I think we're playing a different game than, say, the satellite industry, where they're just in television. We've been investing billions and billions of dollars in broadband every year. And in the case of Wi-Fi, we have the best Wi-Fi, and it's been speed tested by third parties, and we now have a product we call Xfi, which is a Wi-Fi extenders, among other things. So you just plug something in your wall, little tiny jack, and you do it in any room where you want to improve your Wi-Fi coverage. It automatically networks with the rest of your Wi-Fi, no authentication, no passwords. You just have Wi-Fi, and we sell them in 4-packs and 8-packs in our stores. We then have a product where parents can turn off the Wi-Fi at dinner time. So we've been taking our innovation for X1 television and been pivoting it, that incredible culture and the team that we've built, to make the Wi-Fi and the internet better. So when somebody gets video a different way, of course we would like them to take it from us, but we're going to sell more broadband, and in some cases be able to, as the growth and the speed and the capabilities, get more revenue for that broadband. And over at the NBC side, they're selling some of the shows and content and World Series, you know, not in our case, but NFL and World Cup soccer and Olympics, and sell that to you again through a different mean. They're getting paid. So Comcast is positioned very uniquely. And last point, this is the 63rd straight quarter we've had cash flow growth. over 15 years straight. And that's what our company's about, a balance between customer metrics and revenue and cash flow growth. And I'm really proud of the team that has been able to do that year in, year out with a consistency of results and execution.
So, Brian, it's Melissa. It sounds like you're saying even with cord cutters, they're still going to need to get their broadband somehow, and Comcast can do that. And in fact, a lot of analysts are saying that you can even jack up those prices, make it even more profitable. So you are a better position than a lot of the other media companies. At the same time, we've seen Comcast stock. It's down 20% from its 52-week highs. It's down 12% since those comments that Joe referenced were made about subscriber losses in September. So clearly, investors out there are really focused on the bear case out there. They're focused on video subscriber losses. They're focused on the lack of pricing power for a lot of these bundles out there, with the exception of Netflix, which recently raised its prices. What can you tell investors out there to move their attention away from those points and into the stock story you want to tell? Because clearly right now the stock is caught up in a lot of the cross currents of concerns affecting the entire industry.
Okay, well, I think my job is to try to produce results and manage a company and attract people and create great products and great relationships with customers. And your job is to help people pick when to buy a stock, when to sell a stock, and just to be informed. And so what we've tried to do always is to turn the screen off really, and try to make the company as successful as we can for the long term, as if you owned it all yourself. Do what you think is right. Steve Burke likes to call that act like an owner, not a renter. And we've had, as I just mentioned, year in, year out, consistent growth, and I believe we can continue that. And that's, we repositioned the company, reimagined it, our products, and I think that we're playing a different game than some of those other companies you're talking about. There's no comparison in the television. If you want the best, X1 is the best system in the world. If you want the best Wi-Fi, Xfinity is the best Wi-Fi. Xfinity Mobile, which we just launched, is the best deal in the market for a great network with the best Wi-Fi, and we'll have the new products from Apple and Google and Samsung available to you when you want them, and LG and others. So we're pretty excited to have the products we've got with a company like NBC Universal being growing at the really fantastic rate, better than all of their peers. And I think you're betting, when you buy a company, you're betting on a team and a consistency. And in our case, I hope that we continue the momentum of the past, and I think we can.
Brian, the Olympics have always been incredibly profitable and a really big deal for NBC. Yesterday, the Wall Street Journal ran a front-page story that said the Olympics are close, but then in parentheses, the headline read, to North Korea. Is that an issue? Has that put any sort of a damper on what's happening with the Olympics?
Well, there seems to be a pattern. You've been doing this now for 7 or so years of being proud to be the broadcaster for the Olympics to all of America and all technologies. It's a fantastic franchise, but every 2 years there is something. Last Olympics was in Rio, and we were, plagued with Rio stories and corruption and Zika. In London, before that, there were issues in Sochi. And so, yes, there's always something unique, but magically, in almost every case, when you get there, you just are marveled by these people coming into your living room and onto your devices that you didn't know you'd love, and you fall in love every time. And the stories and the heroic nature of how they compete, it's the Olympics. And for 17 days, you can add up ABC, CBS, and Fox, and chances are the Olympics will have triple the viewing of those combined, if not more. Mm-hmm. And it's where we go to perhaps get away from it all and enjoy it every couple of years. And so I have no doubt that this will be a special Olympics, and in so many ways that we can't even imagine right now. We have a great team, literally of several thousand people who bring that broadcast to you, and they are the best in the world at what they do.
Hey, Brian, you know how NFL helped NBC on Sunday nights. I mean, obviously that was part of the big comeback to put it back on top. And you know what's happening now. And I saw something recently that there's a lot of issues, but one issue that people brought up is saturation and whether it's reached that point. And I saw them even talking about cutting back on Thursday nights. And it's not just on networks, it's all over the place. You can get it, over the top as well, or I don't know, there's different deliveries of the product now. Do you get the feeling that it's getting saturated at this point? And have you heard that they're going to cut some of the games on Thursday night, as many as 10 games?
I have not heard that. I think the NFL has shown for a long time that they're the best in sports at what they do. They've got the biggest aggregation, and we're proud and happy to be broadcasting Thursday and Sunday. Sunday Night Football was a game changer, as you said, for NBC. Years ago, it's the #1 show in television. And I think, look, there are lots more choices. The world has changed, and so does the NFL, and they'll have to look at their own business. But honestly, the ratings are getting better every week right now, and it's early in the season, so we're down about 5%. That's a lot lower than people originally thought, and I think with each year, you're not growing audiences because you have too many new options. But boy, there's no way to not get excited by the NFL as you get later in the season.
It's about the Eagles with you, I think.
It is about the Eagles. And let me say one other thing, that you take the NBC strategy, which has worked well and why we're in first place, is it's a big event and big night strategy. And that includes the NFL, that includes the Olympics, that includes This Is Us, and The Voice, and America's Got Talent. And then you look at the Super Bowl next year and the World Cup on Telemundo. And if you're an advertiser and you want to reach large audiences, there's no better way than coming to NBC Universal with our suite of offerings.
Right, yeah, Squawk Box, yeah.
Squawk Box for sure.
Yeah.
Hey, Brian, we want to thank you very much for joining us today. We really appreciate your time.
Thanks, team. See you soon.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.